Success is never accidental. Jack Dorsey. My friends, thanks so much for being with us, Patreon members. I've already loaded up to the Patreon page the three-wave trades. Those are the curated trades from liquid stocks with liquid options and liquid ETFs with liquid options. That's already been uploaded for you. We'll be emailing it out, of course, on Thursday, along with the weekly vertical crossovers. We've also gone ahead and done the charting cryptos, commodities, and currencies. Yes, we review those for you each and every week. We release them to everyone on Friday afternoon. But again, if you're interested in currencies, what's up with the euro, what's up with the yen, the pound, whatever it might be, we deal with that. What's going on with copper and gas and silver and oil and you name it, we look over those too, along with Ethereum and Bitcoin on the 24-hour-a-day chart. So all sorts of fun stuff for you. Now, folks, before we jump into these charts, we see stocks are down a little bit. Bonds, gold, Bitcoin are up. I want to ask you to think about the law of averages. Those of you who've been with us for a while, you know why what we do works because you've practiced, traded it, and you've seen it. And I just want to reiterate to those out there who are wondering, how does the stock market really work for me? How do I utilize the functioning of the market and make sense out of it? And let me just give you the long skinny, because this is something I can't reiterate enough. And there are people who've been with us for a while that it doesn't really sink in until you get to a certain point. Here's our real secret. We have, of course, a simple charting technique where we trend follow on the weekly chart. But here's the brilliance of what we do, and it's called the average true range. Now, we use the average true range on the 2-day chart. And of course, as we look at the average true range, and if you follow where I am, I'm on the left-hand side in the middle of the chart, ATR. That shows you that number 14 means that we're using basically 14 periods to calculate the average true range that on the S&P 500 is $8.75 at this point. That is what we are seeing, the average true range. That is where, well, let me go. Okay. I did not have it at the end there, but as I moved, keep an eye on this number. Let me go all the way to the end. You can see it. It's 870. Let's make sure we got that right. 875, yes. So now that number is where the market, again, on average over the prior 14 periods, and again, this is a 2-day chart, so that would be what? 28 market days. It is showing you what the average movement is a day. Now, that number means something. It's giving you an idea of what the most recent volatility has been and what the market tends to move on that 2-day chart. So to give us some leeway to capture a nice move when we see a turnaround in the market, particularly higher than average volume, when it's finding a bottom like it did back on the 23rd of October, the week beginning then, and then turns around with a spinning top that next week and then takes off. We go ahead when we enter, and again, we like to enter in the first week that's possible, taking a little bit more of a risk then. However, we do that at the end of the week on Friday afternoon when we have a confirmation. And of course, jumping into that move, we go ahead and use the ATR to set up our, and again, we love this little tool under the forecasting and measurement tools. Long position if we're going long, short position if we're going short. And of course, what we do is we go ahead and use that tool to set up our profit and loss bands. The profit band is 1 ATR. The loss band is 1 ATR. What happens when we hit, things go up? That, again, as it is right now, $8. Well, let's see now. We've got, oh, I'm sorry, I was up on the, okay, here we go. $8.75. So when things go up, when The S&P 500 goes up $8.75. What do? We cash out half our position. Then what do we do with the rest of that position? Well, we take that profit and then we put that aside. And then we let the other half run with the market as long as it meets the parameters that we have set. What are those parameters? Maybe a profit parameter. Maybe we want to make 18%, whatever it is that we might have calculated. Maybe 3 times ATR. Once we get that, we're going to sell everything and be done. Or maybe we're waiting to see a bad sign. Maybe both our 2-day and our half-day penetrate the weekly trend line. Maybe the weekly chart penetrate the weekly trend line. Maybe we're waiting for a reverse candle. Any number of things that might keep us in. But what this allows us to do is to take a small profit and then let the remainder run. It also tells us that if things don't work, and even though we've used our knowledge with volume and with the Heikin-Ashi candlesticks and with the trend lines and things go in the opposite direction, what do we do when we hit 1 ATR to the negative? Then we go ahead and pull that trade and we take that small loss and we don't let it be compounded. So the key to what we do here, and the math is very simple and the idea is very simple. We cut our losses when our trade doesn't work, and we let our losses run when it does work. We minimize losses, maximize profits. And those of you who have tried this day in, day out, week in, week out, you find over and over again when you have a chart that is chartable, that is, you have some accuracy in the ability to follow the price movement because you have a good chart. You have a stock or ETF that is chartable. You will find over and over again that just the simple math of stopping your losses and compounding your profits. Again, I ask you to prove it to yourself. It will work time after time after time in your practice trades. And you too will become a believer like so many of our friends. That is the long and short and the simplicity of everything we do here. But would you believe how hard it is to get people to hear that? It is just amazing. But for those of you who just heard it, I know the truth rings true. And you'll continue to be a fan. Let's jump into these charts and see where things are. S&P 500 pulling back 0.40% for the day. We can see that we're not reaching a higher high. We're sitting right there on that trend line. 2-day has already pushed through it. This is the Tuesday, Wednesday candle. We can see on the half day we're sitting right there above it. So again, we see the S&P stalling. We've not gone in a full reverse yet, but we are teetering and we are watching and paying close attention. Now, the NASDAQ 100 down 0.58%, even more so reversing as we see things right now. We have 4 days of down movement having pushed through that weekly trend line on the 2-day. We can see it also on the half day, and we can see it even on the weekly as this little doji there underneath the trend line. Now, does it mean it's not going to move up again? It does not mean that. But again, it sure is giving us a lot of warning signs that things are coming to a close, and we are waiting to see if perhaps, we only have 2 days left this week, but if Thursday and Friday are big down days, we could see the rollover underway. We don't have any supporting volume you can see here, not high volume either way. So again, not giving us a whole lot of signs like it did back here when things bottomed and turned around before. So we will keep our eye on stocks. Now, let's look at bonds. Up again, beautiful, 1.33%. After that stellar day yesterday, popping up again. Look at that big green, beautiful candle as our long trade on TLT continues to move in the right direction. And gold up a little bit for the day, 0.37%. Again, nice strong week last week. This week's continuing to, the first 2 days down, and we're just laying right on that weekly trend line. You can see it on both the 2-day and the half-day. Hopefully, going to bounce off of that, but that is a weak down candle on the 2-day, so we are keeping a close eye on gold. Bitcoin up a little bit for the day, not much to write home about, 0.38%. Looks like it boomed up further in the morning and pulled back a little bit in the afternoon, but those prior days before were quite nice, and a nice 2-day two 2-day candles and a great weekly candle already at average, a little bit above average volume for the week, and an above average 2-day candle volume that finished forming. That is where we are, folks. I hope my little explanation on our entire idea about profits and losses made a nice impact on you, and that it will cause you to jump more into your practice trading, to prove to yourself that you can do this. And as long as you keep in mind, the goal is you're always going to have losses. Don't worry about that. That's not your goal, but the goal is when you have losses, you minimize them. When you have wins, you just don't grab the money off the table. You can sure take half the money off the table, and then you let the rest of it ride in your practice trade. If you do that, you will see over and over and over again how profitable this can be. Prove it to yourself without any money down in your practice trades. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.